What we're going to cover in this video is the importance of financial literacy for business owners. When we look at the stats, actually less than 50% of business owners feel confident in their financial literacy. But the funny thing is, the definition of being an entrepreneur and going into business isn't to be altruistic. It is literally to go into something to earn a profit. So to be able to feel fully confident in what you're doing, it is essential that you feel confident in financial literacy. And I'm going to give you a very quick hands-on, let's go for it tutorial on what you need to know. But spoiler alert, you have been lied to because financial literacy is not hard. It is something that society might have told you, like math is difficult, knowing your numbers is just something that, accountants are supposed to do. No, this is actually one of the most empowering things that you can do as a business owner to get very clear on your numbers. And you don't have to be an accountant, you don't have to be a bookkeeper. In fact, those are things that you want to be outsourcing for your business because that's not your superpower. And when you scale, it's something that you don't need to be doing. But where the disconnect comes from is just because you don't need to be doing it doesn't mean that you don't need to be looking at it. Looking at your financial numbers is essential for growth. If you want to scale, if you want to, move past that current financial milestone, you've got to have clear visibility on what it is that you're doing. And when we think about clear visibility, when we break out our business, it's very simple. We can just break it out into these very two categories that it's going to blow your mind. It's, what are you doing in sales and revenue? And what are you spending? And yes, that is very simplistic on where we can go right now. But if you actually keep it just that simple, things are going to get a lot easier for you. So when we think about our metrics in financial literacy, okay, let's think about our sales and what you need to know for your sales. Then we'll think about our expenses. And then we're going to combine those two and actually understand what that means, because that essentially is your profit. So let's get going on our sales. So high level, your sales, the one thing you want to make sure that you're analyzing on a weekly basis is your top line revenue. Now, your top line revenue is looking at all of the different types of income sources you have in your business and looking at that at the top line, right? So this is just looking at revenue generated. We can get more advanced, of course, where when we fully understand that number, we can start diving into what actually makes up our top line revenue. So that would be breaking out your revenue into different buckets. Next, we're going to want to understand our monthly recurring revenue. Now, this is a really great indicator, and it really shows how fast you can scale your business and how profitable your business truly is. We want predictable things, right? So when we know what our monthly recurring revenue is, we can estimate and we know that this is more or less predictable. So if you're a tech business, this is obviously a metric that you're looking at. If you're a service-based business, this is something you want to ensure that you've got some predictability. Also, if you're a product-based business, because when we can predict will be recurring next month, it's going to be easier to manage cash flow and to grow. So if this is something that you're not tracking or that you actually don't have eyes on, put a note in your notepad to just start diving into this a little bit more. Now, if we continue to go down the sales path, we looked at monthly recurring revenue, top line recurring revenue, monthly recurring revenue. Some more advanced analytics that you'll want to assess are two related to actually your customers. And this would be your annual value of a client, AVC, and your lifetime value of a client, LTC. Also I see it LTV. Why these are important is because typically, if you start to assess your revenue in terms of ACV and LTV, then you're thinking about things much differently. You're going to approach a sales conversation much more relationship-based than transactional-based because you recognize, based off of the ecosystem of your business, how sales actually work. So when you get a client coming in and you're starting to work with them, maybe you close one deal and it's the first kind of in your door offer type of deal. Amazing. That's fantastic. But you also recognize that when you have monthly recurring revenue baked into your offer stack, what happens? The annual value of your client increases. And then you also recognize, because you're a great business owner, that you're probably going to help that business owner over their lifetime and that lifetime relationship with you. So what does that mean? That is going to be another key indicator. That's going to help you predict not only your annual revenue better, but your lifetime value. When you start looking at your sales and you start really running your numbers, and you start looking at, okay, when I look at the cost to acquire a customer, and when I start looking at actually my marketing campaigns and my sales campaigns, and I can understand the ACV and the LTV, what does that mean? It means that you can really understand your business so much more. So these are really important metrics when it comes to our sales. Now, from a collection standpoint, so you might have sold something, but the timing of collection is not going to be necessarily equal with the timing of your sales. So what do you see this happen? So I see this often, right? So if you're working on a retainer base, or if you're working on a project base, maybe you invoice 50% now, 50% later, but you can say that actually you've sold that entire amount. So understanding the cash flow and the timing of your collections is a very important indicator. So making sure that you get clear on your accounts receivable, also known as your AR, is essential. And then later on, I'll make a video about much more advanced ratios that you can look at, because there's something called an AR turnover, how fast you're actually collecting your accounts receivable. Very important, right? This is all strategic in what you want to know. So these are some of our basic sales metrics. Some of our expense metrics are going to be, let's just go with the very basics. So you're spending money in your business. There's two main buckets of how you're spending your money. Three, really. Your first main bucket is your cost of services, or your cost of goods sold. So if you're selling products, if you're selling widgets, your cost of goods sold is the actual cost it took to either make, manufacture, or buy the widget. Your cost of services would be if you are an agency and you are outsourcing most of your services that you're delivering to your clients. It would be the actual cost of labor and any technology that would be related to that. So those are your cost of services, that's your cost of goods sold. Now, why these are important is because those actually tell you, so your sales minus that metric, cost of goods sold, tells you your gross profit. Your gross profit is literally gold here, because it tells you how profitable your actual business is. So your gross profit tells you how profitable your actual business is. This is gold. You want to know if you have a profitable business model before you're doing your selling, your general, and your administrative expenses. Because if your business model in itself isn't profitable, you need to refine and relook it. Good news is that most service-based businesses should have a very high gross profit, and that is important. So make sure that you can actually look at those numbers. Now, QuickBooks, any of your accounting systems, I'll link my favorite ones below. They're going to give you this information when you run your financials. So this is not something that's going to be very hard to calculate. It's just something that you have to look at as the business owner. So really important there. Another number, and it's actually a percentage that is so beneficial related to gross profit, is your gross margin. So gross profit would be a number, right? So if, let's say you had sales of 20,000 and then you had expenses of 10,000, so your gross profit is 10,000. Now imagine this though. Imagine that you could actually see it as a percentage. Percentages are really powerful because you can analyze them month over month. So let's then go look and let's just think about that percentage. It's 50%, right? 10,000 divided by 20,000, 50%. So your gross margin is that percentage. So in that example I gave you, it would be 50%. So you can analyze that. That's a really key indicator that you want to be looking at. So you can analyze trends, you can understand what's happening. So that was your cost bucket number one. Your cost bucket number two is going to be everything that is not your cost of goods, right? Or your cost of services. So I like to bucket it into a few. I like to bucket that big bucket. I like to allocate it a little bit into like, what are your growth expenses? What are you selling with, what expenses have do you have related to your sales, to your marketing, to ad campaigns? That's all grouped into your growth bucket. Then what expenses do you actually have when it relates to how you are operating? So your rent, your utilities, if you have to travel for work, like all of these things are more of your operating expenses. And then I have another category that's like admin, just the small general administrative cost, right? So being able to bucket and see your expenses in these categories allows you to track percentages. It allows you to track where maybe you want to cut costs, and it allows you to assess where you're truly getting the ROI. So if you're tracking these 3 buckets of expenses, this is really important because this is going to allow you to scale your business. Now the sum, now let's just kind of go back to some high level math. So we have our revenue, we've got our cost of goods sold, and then we have the buckets of all those expenses. That equals your net income before taxes. Now, you might have heard of EBITDA, and if you are a publicly traded company, if you're dealing with investors, EBITDA is very important. It means earnings before interest, tax, depreciation, and amortization. But if you're a small business, that is like something that you're going to be talking about maybe at the very end of the year with a tax accountant. But what you really care about is your net income before taxes, or even your operating income before taxes, right? I like to call it net income before taxes. This allows you to really see how profitable your business is. So you want to make sure that you are also analyzing this. And so that is your revenue minus your expenses, those different buckets. Now, when you think about your business and financial literacy, these are already a lot of metrics that I've taught you. There's one important one that you might also hear in the startup scene and just dealing with maybe more high-level businesses. This is your burn rate. How much are you actually burning each month? And so that's just looking at all of your expenses together and understanding your burn rate. And you can look at that over a period of time, because why investors want to know this and why you also want to know this is when you start planning for your cash flow. So if you can predict your monthly, income with recurring monthly revenue and what's happening in the pipe and what's actually happening with your sales team, and you can understand your monthly burn, then you can get a really good projection of your cash flow. Your cash flow is important because just like your personal finances, you want to make sure that you have enough money to cover your operating expenses, enough money to actually grow and make decisions, right? So it's funny, I know that this will depend on your mentality of how you run your business, but having at least 3 months of operating expenses in the bank for you is going to allow you to truly grow. So when I think about this, when I teach people, when I've worked with clients, this is the minimum goal we're looking for, because we know we can cover payroll, we know we can cover operating expenses, and we know that we still have some left over so we can actually invest in growth. So it's really important that you understand all of these metrics so that you can build a profitable business. Now you might be saying, whoa, this feels so intense. Now the good news is this: systems are one of the biggest things that are going to save you time. So if you have a system, an accounting system that's set up well, this is not going to be hard. No, it's not. And if you get a bookkeeper and a bookkeeping team that are going to be essential to actually making sure all of this actually happens. With a lot of this is just setup, making sure that it is set up for success and refining it as you go. What happens is that most business owners neglect looking at their numbers because they're stressed out about it, because it causes them some money issues. And I'll talk to you in another video about what are some money issues that are more of the emotional blocks related to money and why you've got to actually overcome them, because those emotional blocks are really causing you a lot of issues when it comes to growing your business. But back to the systems part, right? So it's all about systems. It's just getting the systems in place, because then those systems are going to generate financial reports. Those financial reports are going to be your balance sheet, your profit and loss, and whatever other report you might want. So it's very important. And one thing just related to mindset about financial literacy before we wrap this video is that financial literacy it's not taught. It's not taught unless you go into accounting. It's maybe taught in some more advanced business classes, but it's not. And with society, even if we think about like personal financial literacy, that's often not even taught in classrooms. So if you're a business owner, you start your business because you're really passionate about it, like you have actually just never been taught any of this stuff. And then society, unfortunately, tells you that this stuff is really hard, and it's not. And so if you're a woman, this has been like, I hear this often, like, I'm not good at math. I'm not good with the numbers. Well, my friend, if you keep telling yourself this narrative, you are never going to be good with it. So an instant reframe is just say, I'm learning this. I'm getting better and better each day with it. When you can shift that reframe from I'm not good at it to like I'm getting better and better at it, this is where you will start to see transformation, because your subconscious mind, that mind that actually is dictating your reality, needs to hear something a little bit more positive, because you've been told for years and years, you probably even told yourself, you're not good at it. Let's not have that reframe, right? So very important thing when we think about financial literacy is to just shift this narrative. So just to wrap it up, to be financially literate as a business owner, it's not difficult. I've just given you a little bit of a roadmap to getting there. The big shift is going to be how you approach this. It's going to be how you approach your mindset now, and understanding that you actually are financially literate, and each day you're becoming better and better and better with this. So that's number one. Number two is to make sure that you've actually got the systems in place to be able to analyze those numbers. Now, check the links below. I've gotten a lot of amazing freebies to help you there with that. And step three is actually doing the work. It's building the habit, showing up every week, and actually looking at those numbers. So my friends, if you like this video, please do give me a like, subscribe if you want more of this stuff, and leave a comment. What are the actual financial metrics that you right now are looking at, and what are some of the favorite ones? Like maybe I didn't tell you the foundational ones that you're looking at. So please do tell me, because when we think about financial metrics, they can be very powerful and they can be very robust. I'll talk to you in another video.